Good evening, Tilaka. Good to see you in the class. Good evening. I had to reschedule the class for certain reasons, so I was not very sure whether you would be able to wait for that long. Good evening, Sharad. Yeah, so in the last class yesterday we were discussing about VAT. Any questions, any queries related to that? We had discussed as to how do we calculate the VAT liability. We also discussed that how are we going to calculate VAT under the in case of stock transfers under different variants. How are we going to calculate? Then which method we have followed in India, the subtraction method, the addition method, or the tax credit method, right? And we had done some of the practical questions also here. We discussed about the rates of VAT as well, and we discussed that all kinds of assessees are required to pay VAT if the taxable turnover is more than rupees 5 lakhs in the previous financial year. And in case they have any refund kind of a situation, then that refund all together, VAT, excise, custom, need a sum, ma'am. Okay, you want just a snapshot of everything. I think that will happen when I discuss with you the GST. Because VAT, excise and service tax rather would be covered there. We discussed as to how these returns are filed and what are the circumstances in which you can get the refund, who is required to get himself registered and when the registration is cancelled, and what are the documents required at the time of registration. These are the things that we have already discussed. We discussed about the composition scheme also yesterday. We also discussed that who all are not eligible to apply for the composition scheme. Okay, now one question and before I take it forward. Tulip traders, a registered dealer under the local VAT law, having stock of goods purchased from outside the state, wishes to opt for composition scheme. This is a registered dealer under the local VAT law, and he wants to opt for the composition scheme. The question is whether it is possible for him to opt for the composition scheme. Can he opt for the composition scheme? What is composition scheme? The composition scheme is the scheme in which the dealer does not have to charge VAT on every invoice. Rather, he is required to pay a composition amount, a composite amount of his total turnover as a VAT to the government. So every invoice that he generates is not liable. He is not liable to charge VAT. The question is that in this case, he has some stock of goods lying with him which is purchased from outside the state. Can he opt for composition scheme? Tilaka says no, and she is very right. He is not able to opt for composition scheme because the dealers who are purchasing any goods or selling any goods in the course of interstate trade or commerce cannot opt for composition scheme. Similarly, the dealers who are selling goods in the course of import or export cannot go for composition scheme. Or in any case, if the goods are getting transferred outside the state, otherwise by way of sale or for execution of works contract, so the dealer cannot. The second part of the question was, will the VAT chain be broken if the dealer opts for the said scheme? The answer is yes. The VAT chain will be broken because in this particular case, because he is not issuing a VATable invoice, and when he is not issuing a VATable invoice, and he is not even allowed to claim the input tax credit. So in this situation, he will not, so the VAT chain will be broken, and but here the thing is that if the composition scheme is given to him, then only the VAT chain will be broken. But in this case, particularly when he is buying goods from the interstate market, when he has purchases from outside his state, in that situation, the VAT chain does not break. Now, what are the other situations in which the VAT chain breaks? One, when the goods are passed on to non-registered dealers because they cannot take the input credit. Similarly, when the goods are not sold but they are gifted, so in that situation also the input tax credit cannot be availed. Or when the goods are sold to the dealers who are opting for composition scheme. Good evening, Ganesh. So we come to the procedural provisions a little bit. We have discussed about the tax identification number. Every dealer who gets himself registered under the VAT, he is required, he would be getting a TIN number, which is called the tax identification number. And he would be able to get the credit, he would be able to claim the credit only on the basis of the invoice. This is what we have discussed in case of SENVAT credit as well. In case the prices increase later on, like I've purchased something for say rupees 2000, and the next day, the seller and the buyer, they realize that the price which was charged was lesser than the price that should have been charged. In that situation, he will issue a debit note. The seller will issue a debit note, and the moment the seller issues a debit note, the amount of VAT will also be calculated and would be paid to the government. Similarly, if the seller issues a credit note to the buyer, then the VAT amount will be accordingly adjusted. So the amount will be credited to the account of the buyer, and in the next month's liability of VAT, the seller can get it adjusted against his current month's liability. Now, in India, the problem was at the time of implementation stage of VAT, we did not have many people issuing bills. Today also we have got many people who do not issue invoices. And if someone does not issue invoice, then definitely getting the credit of VAT becomes very difficult. Second problem that we had was that in different state governments we had got different rules, regulations, and so getting them on a uniform platform was a very difficult exercise. Some of the states were giving some various concessions to new industries, etc., which was not just possible in the VAT regime. There were a lot of taxes which were imposed by the governments which had to be taken away after the VAT concept came into picture. So that led to a lot of rearrangement or readjustment. We did not have infrastructure facilities, and that led to a lot of duplicate bills coming into the system where people, without even buying the goods, they were getting the VAT-able invoices and taking the input tax credit, which become a very big problem over a period of times. And and people are dealing in a variety of goods, so it becomes difficult to implement, difficult to check them. Because why these sales tax incentives were withdrawn when VAT was implemented? Because VAT wants a system which is similar across the country, and then in the VAT system we want to give the input tax credit, right? But when we talk about the incentive schemes, etc., there it is a subsidy that you get against, or you get an exemption from tax. Now, once I get an exemption from tax, I cannot pass on the input tax credit, and that makes it an exempt sales, and therefore he is not allowed to claim input tax credit, nor he is able to pass on the credit. So the VAT chain gets broken. So all these sales tax incentives were withdrawn with the levy of VAT, and therefore there was a lot of readjustment which was required. One last question before we close the chapter of VAT. Majboot Constructions undertakes works contracts and maintains sufficient records to quantify the labour and other service charges. From the details given below, calculate the taxable turnover, input tax credit, and net VAT payable under the state VAT law. Output VAT rate is 12.5%. Because they are maintaining, this is a very important sentence over here, that they are maintaining sufficient records to quantify the labour and other service charges. So on labour and other service charges, we are not going to charge VAT. We are going to charge VAT because it's a case of a works contract In case of works contracts, it is very clearly specified that if you can really differentiate between the material cost and the labor cost, then you will levy VAT on the material cost and not on the labor cost. You will levy service tax on labor and other service charges. So total contract price excluding VAT was 90 lakh rupees. Material purchased and used for the contract, which is taxable at the rate of 12.5% VAT, inclusive of VAT, is 16,87,500. Now you can do the reverse calculation and calculate the amount which is exclusive of VAT. Labor charges paid for execution of the contract is rupees 20 lakhs. Other service charges paid for execution of the contract is rupees 12 lakhs. Cost of consumables used not involving transfer of property in goods, rupees 3 lakhs. Majboot Constructions also purchased a plant for use in the contract for rupees 10,40,000 inclusive of VAT. In the VAT invoice relating to the plant, VAT was charged at 4% separately. Assume 100% input tax credit is available on capital goods immediately. You have to find out that, what is his taxable turnover, what is the input tax credit, and what is the net VAT payable by him. Is the situation getting clear to you? It's a case of a works contract where the material cost has been given to you, labor cost has been given to you, cost of consumables has also been given to you, and cost of machinery has also been given to you. Okay? Now, if we look at the computation of taxable turnover, let us first look at what is the total contract price. It is 90 lakhs. What are the deductions? Because we have to calculate the VAT liability. I'll come to it, Sharad. Just wait a second. So, what are the deductions? Because we're talking about VAT liability. So, labor charges, service charges, and cost of consumables is also reduced. Now, why the cost of consumables is reduced? Because the ownership is not transferred in the consumables. It was given to us in the question that the ownership in consumables has not been transferred. So we reduce the cost of consumables, the service charges paid and the labor paid of rupees 35 lakhs. Now the remaining is 55 lakhs, which is your taxable turnover. On this you have an output VAT payable at the rate of 12.5%, which is coming as 6,87,500. As against that, we have got the input tax credit. It is on a material worth rupees 16,87,500. So what we do, because it is inclusive of tax, so we find out the amount which is exclusive of tax, and then we find out the VAT amount involved. So it is 1,87,500 is the amount of VAT in this particular case. Now we have also been told that a plant has been purchased for rupees 10,40,000 and there is a 4% VAT which has been charged, and this 1040 is inclusive of VAT. So if I try to find out what is the amount of VAT, it is 40,000. We have been told that the 100% of the input tax credit on capital good is available in the same year. So we give the full credit. Total credit is 2,27,500. We reduce 2,27,500 from 6,87,500. So the net VAT payable is 4,60,000 rupees. Right? So is this example clear to you? Now I'm coming to Sharad's question, what about SIC company, whether it will get the VAT incentive? See, the VAT itself does not have any incentive. In the sales tax regime, there were a lot of incentives which were given to various kinds of companies. They had sale tax incentive schemes. STIS they used to call it, and they used to be very, very commonly available depending upon the sales tax turnover. The people were given a lot of incentives. But those schemes have now become irrelevant in the VAT regime. No such schemes are there. Right? So even if you are a SIC company, you do not get any scheme because in the VAT regime there are no such schemes. Okay, do you want to take one more question? Why consumable stores have been deducted? Because the ownership in the consumable stores had not been transferred. That was given to us in the question. VAT can only be charged when the ownership in the goods is getting transferred. It's at the time of sale, right? And at the time of sale, the ownership in the goods gets transferred. So the complete concept of VAT is applicable only in case of sale. Otherwise, the concept of VAT is not applicable. It is either on sale or on deemed sale, right? So deemed sale situations we have already seen. Now we've got one more question. Following information relates to purchases and sales of Kapil Limited for the month of September. Purchases for resale within the state is rupees 8 lakhs. Purchases from registered dealers who opted for composition scheme is rupees 4 lakhs. Purchases to be used as consumable stores for manufacture of taxable goods is 6 lakhs. Purchases of goods where invoices do not show the amount of taxes separately. Purchases of goods for personal consumption, purchases of capital goods. And so this kind of a question I think we've already done. There is no, though the solution is there, I'm not doing the question again with you. Okay, because you've already done this a kind of a question. Many a times these kind of questions also are asked in the examination. Role of company secretary under the VAT regime or under income tax or under service tax or under excise. See, this is something that you have to generally write, that company secretaries, they do the consulting role, they do the they can register their clients, they can do all the procedural aspects under the VAT regime or service tax or what do you call it, excise or customs, etc. So they can file the returns, they can fulfill all the procedural requirements, they can act as consultants, they can act as legal advisors, they can do VAT audit also in certain states. I think in Delhi also the company secretaries have been permitted to do the VAT audit. So they can also appear as authorized representatives of the VAT dealers in the matters relating to VAT to the department. So in the VAT regime there is a sufficient scope for a company secretary where they can participate, they can consult, and they can do a lot of procedural aspects, right? Whether CES will be allowed for GST audit. Now I'm coming to now GST. This is a big question mark which is coming, and a lot of representations are being made for getting GST audit by a company secretary. Let us see where it actually lands up. So the next topic which I have to discuss with you is GST only, and the question which is coming from Ganesh is also on GST. So let us start GST. You must have heard a lot about GST these days, right? So I am not going into complete details of valuations and all that under GST, because what I personally feel is the basic structure of GST, if it is clear to you, all other things are the old wines in the new bottle. Basically because the concept is going to remain the same. The concept of excise and service tax is same. Basically the concept of VAT is also to a very great extent similar to excise and service tax only. So we are coming in a new regime which is going to be better in various aspects. Secondly, this is a regime where things are going to be very, very simplified and easy to understand for a layman as well. But then, if you look at the procedures, if you look at the departmental officers, if you look at the offices, I think not many things are going to be changed. So now starting with goods and services tax, and this is also going to answer Tilaka's question where she's saying that, we need to revise everything that, in a nutshell, what is service tax, what is excise and all that. So we come to GST, and it is a kind of revision of all kinds of taxes that we have under the indirect taxes except customs duty, because customs duty is not getting subsumed in GST. So if you look at the present structure of input tax credit, you have seen input tax credit concept being followed in service tax. You have seen input tax credit concept being followed in excise. You have seen input tax credit concept being followed in value added tax, that is VAT as well. So this input tax credit concept was developed way back in somewhere in 1986 to avoid the cascading effect of taxes, right? When we look at the VAT mechanism, whether it is in excise or it is in customs or it is in VAT itself, not in customs, excise or service tax or VAT, what we say is that the taxation should be on the value added, right? It should not be a tax on tax. So this particular concept was started, as I said, in 1986 under the scheme of mod VAT, where certain specified inputs were allowed the set off of credit. the scheme was further increased in 1994, and capital goods were also brought into the scheme. And then in the year 2000, it became a SENVAT credit scheme. From Mod VAT, it became SENVAT credit scheme. 2002, service tax credit SENVAT credit was also started, and in 2004, SENVAT credit for excise and service tax were clubbed together by merging them and giving a cross-sectoral availment and utilization of credit. So now you can utilize the credit of service tax for the purpose of payment of your excise duty, and you can utilize your input tax credit of excise for the purpose of payment of service tax, right? All this we have already studied, all this we have already covered. Now coming to the basic concept once again, where we say that in SENVAT, whether you have inputs, whether you buy inputs or you buy capital goods or you buy input services, whether you are a manufacturer or a service provider, whatever goods and services you buy, you can get the input tax credit on these, and you can utilize this input tax credit for the purpose of payment of excise duty on final products or for the purpose of payment of service tax on output services, right? So this scheme is available. 2004 SENVAT credit scheme is available both for the service providers and manufacturers, and under this scheme you get the input tax credit of excise duty, service tax, countervailing duty paid on inputs, capital goods or input services, and this can be utilized for the purpose of payment of excise duty and service tax payable on final products and output services, right? And under the state level, we have got a value added tax in the sales tax structure, where again you are paying tax only on the value addition. It's a multi-point tax where you get the set off of the taxes paid on the previous purchases, right? But you do not get the set off of intrastate purchases. You can simply use the input tax credit of VAT to some extent for the purpose of payment of CST, right? So the VAT system is not having any cross relationship with the existing SENVAT system, isn't it? The VAT system is running completely parallel to the SENVAT system, right? So that again, is a bigger issue. And under GST, this VAT has to be merged with the SENVAT. What is happening in GST? In GST, this VAT has to be merged with SENVAT. Okay? So, again, GST is also a value-added tax because VAT is also a value-added tax and SENVAT is also a value-added tax. And in this, whatever taxes will be levied at all points of the supply chain, whether it is at the stage of manufacturer or it is at the sale of wholesaler or it is at the stage of the retailer, at every stage, whatever value addition has happened, tax should be levied only on the value addition. And the input tax credit of VAT should be available against, the current VAT should be available against the SENVAT, and the SENVAT credit should be available against VAT, right? So that is what is the idea, that is what is the approach towards GST. Is this point getting clear? So why GST? Because as of now, SENVAT and VAT are moving in as two parallel lines. We want to merge them together because definitely there's going to be a big value addition by that. So therefore it is called a goods and services tax, right? So all kinds of duties and taxes on goods, whether it is excise duty or it is the value added tax, that is going to be merged together in a comprehensive manner, and the exemptions are going to be very, very minimum, right? Now, the problem which we have been facing for last so many years is that we have got a federal structure, and in the federal structure, we have got the central governments and the state governments, right? The central government levies the taxes which are given in the union list, and the state government levies a tax which has been given in the state list. So over these years, the different state governments have got their own, ways of financing their budgets because they're levying certain taxes, and the central government has got its own way of financing its own budgets by its own taxes. Now, when we merge them two together, there are a lot of questions which are going to be asked, right? So can we actually merge them? Do we have the constitutional powers to merge them? That is the first question. Then the second question that comes up is that if we are going to merge them, then how will the states be getting their own share of revenue that they have been getting for last so many years? So in order to answer these questions, the first question, that do we have the constitutional mandate? In order to answer that question, a constitutional amendment bill was presented in the Lok Sabha, which has now been passed by Lok Sabha as well as Rajya Sabha, and has been approved by the President of India as well. So that led to the change in the constitution, whereby now we can have one single tax which is called GST, where which will subsume your excise duty, service tax, and VAT, and many other taxes as well. But in order to still maintain the federal structure, this GST has been divided into two parts: central GST and state GST. We have got central GST and state GST. Okay, now this is something that you have to understand. Do you have any idea about central GST and state GST? Anybody? Hanji, do you have any idea? You don't have any idea. Okay. Okay. So we will be having this GST in two parts, rather in three parts: central GST, state GST, and interstate GST. Okay. So the concept that we have is the destination based taxation, which we have in service tax as well. Under the destination based taxation, what we do, we say that wherever the services are going to be consumed, or wherever the goods are going to be sold, at that point of time, the CGST and SGST would be levied. CGST is central GST and SGST is the state GST. So it would follow the destination principle. So that means import would be subjected to GST, because if anything, any sale or purchase of goods or services is happening within the taxable territory of India, in that situation the GST will be applicable, and definitely if we are getting certain services or goods from outside India, then that will be subjected to GST. But when I am exporting certain goods or services from India to outside India, because the destination is not India, so therefore there is not going to be any GST on the exports. So exports are going to be zero rated. In case of interstate transactions within India, that means if a transaction has to happen between Himachal Pradesh to say Arunachal Pradesh, in that situation we will again apply the destination based taxation. So the state which is getting the goods will be getting the taxes. Now how does that follow? And how it actually worked. If I studied it from one of the reports by Ernst & Young, that this entire process of levying, of introducing GST started in the year 2006-2007, when the finance minister at that point of time proposed introduction of GST from 1st of April 2010. Right? So it was way back in 2006 that we started this exercise. Then an empowered committee of the state governments was constituted, and it was decided, and when VAT was also levied, the idea, at that point of time it was decided that over a period of time CST will be phased out, right? But CST could not be phased out, it could just be reduced from 4% to 2%. Okay, so then an empowered committee of state finance ministers was constituted, and they started working on it. So they came up with a report. This report was authored by Dr. Partha Sarthi, who is one of the very well-known economists in our country. Then, empowered committee finalized its views and created its report. And then, CST rate was reduced from 3% to 2% in 2008. First discussion paper was released. A lot of discussions were happening. A lot of papers were being presented. The basic structure of GST was ready by 2008-2009, and we're still on that structure only, with certain changes, certain important changes definitely. So the constitutional amendment bill was required, because now there was going to be one tax which is going to be levied across the country. So definitely there was no concurrent jurisdiction under the taxation structure. So we needed an amendment in the constitution. So the constitutional amendment was first proposed in the year 2011 before the parliament. The matter was referred to the standing committee. The standing committee gave its report in 2013, and then there was a proposal whether petroleum and petroleum products should be covered under GST. But then, it was decided that at the initial stage, we should not include petroleum and petroleum products under GST. So in 2013, the empowered committee rejected this proposal to include the petroleum and petroleum products. 2014, again, the revised constitutional amendment bill was tabled before the parliament. 2015, Lok Sabha passed, on 6th May 2015, Lok Sabha passed the constitutional amendment bill. Then, it was presented to Rajya Sabha, and, Rajya Sabha has also approved it in the month of August 2016, and thereafter, in the month of September, the President has given his consent on the constitutional amendment bill, and thereafter, before the President's assent, it was required that minimum 20 state governments should pass this constitutional amendment bill, the GST bill, and, once the 20 state governments, and more than that rather, when they passed the GST bill, thereafter, the bill was signed by the President, and now it has become a Constitution 122nd Amendment Act 2016. Now, what was so special about this Constitutional Amendment Act? In this Constitutional Amendment Act, a concurrent jurisdiction for centre and states was decided, because both the central government and the state government were given the power to levy GST. So far, what has been happening, whatever states are being levied by the central government are not levied by the state government, and whatever taxes are levied by the state government are not being levied by the central government. Now, in the GST amendment bill, in the Constitution Amendment Bill, it gave a concurrent jurisdiction to both the centre and the states to levy GST, right? And, then the question comes that, okay, if both of them have got the powers to levy GST, who is going to design the structure? Who is going to take decisions with respect to operational aspects of GST? So for that, a GST Council was constituted. Was the constitution of GST Council was also a part of the Constitution 122nd Amendment Act 2014. So now, after the amendment and after its passing through the various state governments, now how does the GST stand? GST is going to be levied on the supply of all the goods and all the services except for certain specified goods, which I would be telling you what are those specified goods. There's going to be a dual structure of GST, and it is going to be levied concurrently as CGST and SGST. We are going to have a CGST. In CGST, like if I give you the basic structure, in CGST, we are going to include all the central government levies. Whether it is excise or it is service tax, all of them will be called CGST. And in SGST, we are going to include all the state government levies, right? Whether it is VAT or it is entertainment tax or it is entry tax, all of them will be subsumed as SGST. I'll be discussing that later also with you. Now, and there's another tax which is in the GST framework, which is called IGST. IGST is replacing CST. That means that in case of interstate trade or commerce, a tax which is going to be levied will be called IGST. Now it's getting clear? So at all the taxes which are going to be levied by central government will get subsumed in CGST. All the taxes which are going to be levied by the state governments are going to be subsumed in SGST. And all the taxes which are going to be levied by, at the interstate sale or purchase is going to be converted into IGST. As I said, that there's going to be a GST Council. Now, what is this GST Council all about? Basically, because once we are going to have one particular law, one particular set of tax, which is going to be levied by both the central government and the state government, the administrative powers with respect to that particular tax can neither be given only to the state government and can nor be given only to the central government. So we need to have a council. Now this council will be constituted, or it has been constituted rather, which comprises of the Union Finance Minister, the Minister of State for Revenue, State Finance Ministers of all the state governments, and this council will recommend the GST rate. It will also provide for exemption and thresholds under the GST regime, the taxes which have to be subsumed into GST, and all other features. It also has to ensure that there is a complete harmonization between different aspects of GST between center and states, right? And whenever this GST Council is going to meet, 1/2 of the total number of members would form the quorum of the meetings. The decisions would be taken by a majority of not less than 3/4 of the weighted votes cast. So in the GST Council, the weight of central government's votes is more. So because the number of representatives from the central government is going to be lesser as compared to the number of representatives from the state government, but the weight of the vote of central government is more than the weight of the votes of the state governments. Center would have 1/3 weightage of the total votes cast, and all the states taken together would have 2/3 weight of the 2/3 of the weightage of the total votes cast. So that's how this particular GST Council is going to be constituted. Now coming to which all taxes are going to be subsumed in GST. At the central level, central excise duty, service tax, additional duty of customs, that is CVT, special additional duty of customs, central sales tax, central surcharges and cesses, all of them will now be renamed as CGST. At the state government level, value added tax, that is VAT, octroi and entry tax, purchase tax, luxury tax, taxes on lottery betting and gambling, state cesses and surcharges, entertainment tax, central sales tax, if any levied and collected by the state governments, will come under the state GST. Now we come to the objectives, and we try and understand how the system is actually going to work. See, the idea was that still, even after having SENVAT at the central level and VAT at the state level, still there were a lot of gaps because there was no set-off between the sale and purchase in the interstate trade and commerce, and then you were not getting the input tax credit of your excise duty paid against VAT. You were not getting that, right? If I am paying excise duty and then on the same goods if I have to pay VAT, I do not get the input tax credit of the excise duty for the purpose of payment of VAT. Will I be getting that in the GST regime? I'll be sharing it with you. Yes, you would be getting, but subject to certain conditions. So in this particular system, the idea was to eliminate excessive taxation so that we can get the set-off of the input tax credit at various stages. The idea is to disincentivize tax evasion, come up with a lower tax rate, and make the business operations easier. So now GST, because I said GST will be applicable on all goods except specified goods. So what are those specified goods? GST will apply on all goods and services except alcohol for human consumption, electricity and real estate. Tobacco and tobacco products are part of GST, but in addition to GST, to some extent on tobacco and tobacco products, the central government will still impose the central excise duty. So over and above the GST, there will still be some central excise duty. GST on petroleum and petroleum products has not been, will not start from the initial stage, but later on, from a date which is going to be recommended by the GST Council, the GST will also come on petroleum and petroleum products. Now we are going to have three kinds of GST: CGST, SGST and IGST. The rates have actually been finalized by the GST Council. Some people are saying it is close to 20%, but because I've not cross-checked it myself, so I would not be giving you the rates. But the rates have now been finalized. Exports, as I told you, are going to be zero rated, and imports would attract the tax normally as the other goods and services are going to attract. Interstate supply of goods within India will attract IGST. Now, what is this IGST? IGST will be the total of CGST plus SGST. In IGST, in case of interstate trade and commerce, IGST will be made applicable, and IGST is sum total of CGST plus SGST. Okay? Okay. In addition to IGST, now this was the question which was asked yesterday, that will CST will go away with GST? Right? You had asked this question. I think Ganesh and Sharad had asked this question. Now, in addition to the IGST, in respect of supply of goods, an additional tax of up to 1% has been proposed to be levied by the centre. The revenue from this tax is to be assigned to the origin states. This tax is proposed to be levied for initial 2 years or such longer period as recommended by the GST Council. So, in the interstate trade and commerce, with respect to goods, there is going to be still 1% tax. You can name it as CST as well. And the idea behind this tax is the same as is the idea behind CST, because this tax will be given to the origin state and not to the destination state. And in the VAT regime also, yeah, but the rate has definitely been reduced from 2% to 1%, right? But still, this in the initial phase, because the states had got a lot of reluctance in giving away this revenue that they are having from from CST, so this has been reduced to 1%. Import of goods and services would be treated as an interstate supply and will be subjected to IGST, right? So when you import certain goods, you would be paying the customs duty. Along with that, you would also be paying IGST. Okay, because now there's not going to be any CVD, no countervailing duty will be there. So now that the structure is there, so how are we going to talk about the input tax credit? So what I'm trying to say is that if it is a sale within the state, then we will levy SGST. If it is a sale in the interstate, then we are going to levy IGST. Okay, plus 1%. That's clear. And IGST includes CGST plus, just one correction here. If it is a sale within the state, we are going to levy both CGST and SGST. If it is a sale within the state, because CGST will be levied in lieu of the excise duty, right, and service tax, and SGST will be levied in lieu of the VAT. So if it is a sale within the state, you will levy both CGST as well as SGST. Okay? And in case of interstate trade, it would be IGST plus 1%, and IGST will be a sum total of CGST and SGST. बात समझ में आ रही है? Is it getting clear to you? Okay. Now comes that how are we going to get the input tax credit? Yeah, in case of IGST, it is IGST plus 1%. No, in case of IGST, it is only IGST, no? Because IGST itself is a sum total of CGST plus SGST. Okay, ji? So now, this is clear. So that means that if I am selling within the state, so if my product cost or the product value is rupees 100, I will levy CGST and then I will levy SGST, and then I'm going to calculate the amount. And if I'm selling in interstate trade, then if my product value is rupees 100, I'm going to levy IGST, which is CGST plus SGST plus and also 1%. Okay, ji? This is clear. Now the question comes at how are we going to do the input tax credit. CGST paid on inputs can be used for paying CGST on output. So CGST credit can be utilized for the purpose of making the payment of CGST. Okay. SGST can be utilized for the purpose of payment of SGST. Is it getting clear? CGST's input tax credit can be used for the purpose of payment of CGST, and SGST input tax credit will be used for the purpose of making payment of SGST. This is clear? In other words, the two streams of input tax credit cannot be cross-utilized except in specified circumstances of interstate supplies for the purpose of payment of IGST, which I would be discussing with you. This is getting clear? So you cannot set off SGST with CGST and CGST with SGST credit. Okay? Now, coming to the third situation, when I have to pay IGST. Now, when I have to pay IGST, in that situation, I can utilize my input tax credit of CGST. I can utilize my input tax credit of SGST also for the purpose of payment of IGST. This is clear? CGST against CGST, SGST against SGST. When it comes to IGST, both CGST and SGST credits can be utilized for the purpose of payment of IGST. This is clear? Okay. Now, if I have got IGST credit, I can utilize it for the purpose of payment of IGST or CGST or SGST. Is it fine? Yeah, with that 1% extra, that credit is not available. No, you have not got no input tax credit of that 1%. Input tax credit of additional tax would not be permitted. As we do not get any credit of CST as of now, so this 1% has come in lieu of CST only. And there is no input tax credit which is available of that. Clear? Is this stream clear? Now, if I have got CGST credit, I am going to utilize first for the purpose of making payment of CGST. But if anything is left out, then I will utilize it for the purpose of making payment of IGST. Similarly, for SGST, if I have got SGST credit, I will first utilize it for the purpose of payment of SGST and then for the purpose of IGST. If I have got IGST credit, I will first utilize it for the purpose of payment of IGST, then for CGST and then for SGST. Yes, only if any balance remains. So, if you look at this, don't you realize that they've done it so well that whatever was the central government levy is getting its input tax credit with the central government levy only, or at the most it is getting set off with the interstate trade and commerce, right? So this structure, when I first of all studied, I felt it to be awesome, right? Isn't it designed in such a beautiful manner? It seems as if it suits completely the requirements of our country. Still, it has taken 10 years for it to finalize. Why so? Because lot of difficulties were there, which I would be giving you a snapshot if time permits. Additional tax is that 1%. Okay, that 1%. Now what will happen? CGST credit will be against CGST, so there is no problem with the accounting. SGST credit is with SGST, so there is no problem with accounting. But when CGST is getting adjusted with IGST, there is no problem because it's again going to the central government. When SGST is getting adjusted with IGST, then there is a problem. Why? Because I had got the credit of any tax which was paid within the state. Now it is used for the purpose of payment of an interstate tax, and the benefit is getting transferred by the exporting state to the center. So for this, the central government will settle the accounts periodically, and whatever credit of SGST has been utilized for the purpose of making payment of IGST, that much amount will be transferred by the central government to the state government. Similarly, if IGST has been used for the purpose of making payment of SGST, then the state government would be transferring the credit to the central government. Okay? Or maybe I'm speaking opposite. I'm speaking opposite. If SGST has been used for the purpose of making payment of IGST, then definitely the state should transfer the money to the center. And when IGST has been used for the purpose of making payment of SGST, then center should transfer the money to the state. I spoke it ulta. So this is the structure as it is. The benefit of GST is definitely going to mitigation of cascading impact, making things in life very, very simple and easy, because now you have only one department where you have to go. You have got one set of records and returns which you have to file. You've got to pay only to one department the entire amount. So you've got one set of assessments, one set of registrations, and you're going to have one rate which is applicable across the country. So definitely it is going to be something which is going to streamline things. And then if you go in depth of GST, you would realize that here because we said in SENVAT credit and in case of VAT we said 1-to-1 correlation is not there, but in GST 1-to-1 correlation is there. So therefore the tax evasion will definitely be coming for a standstill once we have GST, and that is why it has taken a lot of time is not only because of political issues between the different state governments, but also because from the perspective of infrastructure, the IT infrastructure, we were not ready. And you must have seen an advertisement which was published by ICSI, where they were looking for the company secretary students and CS professionals to work on and to train upon the GST information technology, because there's going to be a large impact, there's going to be a very large structural change in the IT systems that we are following right now within the government and within the private parties as well. So there's going to be a biggest advantage. This GST implementation definitely is going to be a biggest advantage for the consumers. If they ask you a small question saying that write a short note on GST, then definitely you must talk about the initial slides which I said that what is GST all about, which all taxes are going to be subsumed in GST, what is the structure, what is the how GST is going to work, and the benefits of GST. I think that should be a short note where you write what GST is all about, which taxes are going to be subsumed, how it is going to be implemented, and what are the benefits. In short, you can cover this much. Okay. So this concept of GST is definitely going to be very, very advantageous for our country. There's going to be one common threshold under GST. So as we have right now 5 lakhs in VAT and 10 lakhs in service tax, and then in case of excise we've got a limit of 1 crore, 1.5 crores. There's not going to be different thresholds in now GST regime. There's going to be one common threshold for both CGST and SGST. So that is going to be common. Taxpayer below that particular turnover limit would be exempt from GST. There would also be a compounding scheme as we have for the small taxpayers in case of service tax, excise and VAT as of now as well. So, and these schemes would be definitely optional. Whether the credit system related question or some technical question from this part is possible, or only introductory type of question. See, it it is like, so far they have been asking only introductory questions, but yes, if it is a very a forward looking examiner, he can ask you a question on set off of credit as well. Now you know the structure. I don't think so you will have any issues with doing a practical question also on that. There are a lot of examples which are available on internet as well on the set off of the structure, which I've already discussed with you. If you really want, you can do one simple question also, one practical question on calculation of GST. Though I am not personally expecting that kind of a question in examination, but there's no harm in looking at one practical question, taking the numbers as to how GST is going to be charged in different transactions and how the set off is going to happen. Because theoretically, I've discussed with you, with the help of numbers, you can definitely take up any example, any small example from internet, and a lot of examples are available on different websites. So this is just summary of some impact on different verticals. I think with GST, all the departments of an organization, it is not only the taxation department which is going to be impacted with GST. It is the sourcing, that is the purchase department. The distribution department has done so much by creating a lot of stock transfers and clearing and forwarding agents and a lot of stuff in order to reduce the VAT liability as they have right now. So all those structures will have to be dismantled. Your complete IT softwares have to be changed. So GST is going to be implemented from April 1, 2017. And it is very important now that all of us, whether the professionals, the taxpayers, the government, all of us have to be prepared within these 4-5 months time only. And the policy is now in place. It is simply that we have to be prepared enough to follow that policy. Okay? So, but ma'am, GST is yet to be in ICSI syllabus, so technical question whether possible. As I said, Sharad, it is not, it is, though they have included an overview of GST in the syllabus. Now, once they have something written in the syllabus, it becomes very difficult to say that they will not ask a practical question on GST. They definitely will not ask you a very difficult question, that's for sure. But they can ask you, now that they have been asking from last 2 attempts, write a short note on GST. I am expecting a slightly higher question, like discuss the set off of various taxes, or what are the various kinds of taxes which are going to be levied in GST and how they are going to be set off against each other. They can ask that kind of a question. Or they can ask, what are the powers and functions of GST Council? So that they want to go one step beyond, I'm definitely expecting. But I feel that if they have to ask a better question rather than a theoretical question, then they should ask a question on the set off of the various credits also under GST. It can be a very small short question, but they can ask that. And for you, I'm sure it is not going to be very difficult, because you've already done SENVAT, you've already done VAT. So it's going to be on those lines only. So it's not going to be very difficult. You simply have to do one question and then it will be clear to you. I have given you this because I do not want to take any chance, because GST is something which is in these days, and those people who are dealing with, who are preparing for it day in and day out, if they have to prepare the question paper, it will become their choice to come up with a question on GST. Okay, whether it is in the syllabus or it is not in the syllabus, but still, if a small thing is there in the syllabus, then they will take a chance on this. Tough question will be asked if they want to create high tawba in between examinees. No, they will not ask a tough question. That I can assure you. It is going to be a simple question only, and for that I've already prepared you. Okay, it's not going to be tough. Definitely, it's not going to be tough. Okay, I haven't checked that. Yeah, I came to know that they're coming up with a special issue on GST, but I did not check that issue. I'll definitely do that. But those issues those articles are talking about things in greater depth. From examination point of view, that kind of a depth may not be required. You can simply have a fair idea by reading one simple article on GST. That may be the first or the second article, and that should be enough. You might not have to go into various aspects of input tax credits and stock transfers, and a lot of things are there. So leasing, hire purchasing, how they're going to be taxed, what kind of abatements are available under GST, and all that stuff. You're not required to go into those kinds of depths as of now. I do not understand this, Sharad. So I think with this, yeah, there are a lot of schedules, there are a lot of the transitional provisions have come up. So how we are going to transit from the current regime to the GST regime, this is a very big, challenge which the country is going to face. And but again, the laws and rules have become very, very, very. They're coming up with very clear transitional provisions. But still, if I look at it from the perspective of the corporate sector, there's a lot of anxiety. So people are saying that we would not be keeping any stocks in the end of March because we do not know whether we would be able to set off our existing credit against GST or not. And if yes, then they might be coming up with certain conditions. If we do not fulfill them, then it's better not to keep the stocks. So a lot of discussion is going on, but that is not relevant for you as an examinee. You are simply supposed to understand it as a concept and present it well in the examination. So with this, I feel it my proud privilege to say that we are through with the complete syllabus of ATLP. We have done it in greater detail, and I'm sure that all of you being regular attendees in this class must have, collected a lot of information by now. It is now in your domain and you have to make best use out of it. You are right now in a very, very important time schedule. We are already on 23rd of November and it is exactly 1 month before the examination that we are finishing off with the syllabus. So you have got 1 full month with you to revise it, to re-revise it, and to be very, very strongly ready with your preparation. I wish you all the very best for your examination. Thank you so very much for being such a patient audience with me. And I wish you all success. May God bless you with health, with happiness, with patience, courage and determination to take up this examination in the right spirit. All you have to do is to prepare well, present your answers well, and do write the complete papers. Please, 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 my humble request to all of you, please do not leave any question unattended. Full 100-mark paper must be attempted. There is no scope of any kind of benefit coming from leaving the question paper. So, we will make you proud. Of course, yes, I shall be the most happiest person to see you successful. Thank you so very much, and it's definitely my privilege. Ganesh, yes, thank you so very much for being a student second time with me and trusting me again with the classes. I hope I have been able to deliver up to your expectations, and I wish you all the very best. I'm sure with your hard work, with your determination, you're definitely going to succeed. So with these words, I again request you to remain in touch with me, to present yourselves and to prepare well for the upcoming full course exam preparatory that we have on 4th of December. And whether now, because this is coming up, whether it is a success or it is a failure, I don't call it as a failure, it's a feedback rather. Whatever is the case, we are always going to be together. So in good times and bad times, in hard times, in sweet times, we would always be together. And with this note, good night, bye-bye, take care, study well, drink a lot of water, take care of your health, take care of your mood swings, take care of your daily schedules, take care of your food requirements, and be very happy and contented in your life. Give 100% to your studies. Don't think this or that. And I'm very, very sure that you're going to come up with flying colors. Thank you so very much. Have a great learning experience.